Good evening, everybody. Welcome to the Lock in Your Success Trade and Market Update for November 18th, 2012. Very interesting week in the markets last week, and not at all what we were expecting. If you remember correctly, we were hanging out in this area here. I was expecting maybe us to pull down a little bit lower, so this day here wasn't too much of a surprise, and then for the market to come in and probably bounce these levels. However, I wasn't terribly confident of that bounce, but we were wrong nonetheless. The sellers came in and they took the election of Mr. Obama a little worse than I thought, and we continued to the downside. Where the market did at least bounce on Friday should not have been much of a surprise to anybody. It is towards the bottom of this support area that we had marked out. Also, if you're a Fibonacci trader, you'll notice it pretty much came right down to the 61.8 Fibonacci line, which is another common reversal point. The only hesitation I have about the thing that we actually haven't come down to this trend line here, and I wouldn't be surprised if we did at least do that to the downside. So for the short term, or at least in the morning, we have this bounce starting. Depending on where this goes is going to give us a good idea of what the market's going to do in the future, but right now we really don't know yet. So this is the where the buyers have stepped in. The patterns intraday look a little bit more like this is a short covering move. I would expect Monday morning or tomorrow morning, everybody says, "Oh, this is the end, and we're going to get this really big bounce," and you can see the futures are up a little bit already, and I wouldn't be surprised if they come in and give this bounce a little bit more legs. However, I would have absolutely no concern of this following through until we hit the at least break out of the 200-day moving average, because we're going to have some resistance here on the bounce. So we'll see what happens during the week. I would expect a fairly low volume week because we do have that Thanksgiving holiday, and a lot of people are going to be on vacation. So all we can say is we've got a good breakdown of the markets. Wouldn't be surprised with a bit of a relief bounce. I still think we're going a bit lower here. We shall see. If we take a look at the NDX, we have a similar story last week. We had a very hard sell-off. We came into what I would call a support level. This whole gap area here is kind of a support level. If you come in here and run into here, this is an area where we commonly turn around. We did have some churn through here, but it supported here, supported here, supported here, and it's trying to support here again. With how far this has come down, I would again, however, think that we retest this lows, which ties into the primary trend line really nicely. So I would expect a little bit lower here. Again, although we may have a decent bounce off of this hard sell-off, which wouldn't be any surprise. If we come to the Dow, we have broken our, if we go back to a 5 here, we have broken through our primary trend line. We'll have to see how much further it goes. We do have some nice shorter term support in this general area here. If we want to box this in, this area here is a fairly decent support level. If this fails, we are very likely going to test these lows right down at the 12,000 level, and that'll be the next point to watch here on the Dow if we do continue down. And back to the good old Russell. This should be no surprise we turned here. This trend line, if we go longer term, would be the steeper of the uptrend lines that we have here. It'll be interesting to see if this holds. It wasn't a surprise that we turned here because we had our horizontal support level here, our longer term horizontal support level, We had this support level we've had drawn in for quite some time. We've also, like I said, had this longer term uptrend line, all converging at the same place. And they make perfect sense once we fell out of this channel last week and didn't go right back up into it, that we would come down to this area here. That move makes perfect sense on the rut. Should the market start to fall apart and everything else goes down like I think it's going to, then 750 is our next point to watch. If we get too much further, we're probably coming down to this guy here, this 730. So the next drop down would be to 750. As I said, right now we're in a bounce. Most likely move is a bounce into the bottom side of this trend line, then a little bit further down, judging by what the other indices are having. Should we break back up into this channel, that would be fairly bullish up to 820, or at least the 810 area, and we would have to see where it goes from there. So we're kind of in limbo. We got that extended sell-off last week. We'll have to see where this bounce goes and how strong it is. We've had some very strong bounces off this support level, so it certainly wouldn't be a terrible surprise. However, there's a lot of underlying things going on, and until they do something with the fiscal cliff and so forth, I think any up move is going to be muted, because that seems to be more of a concern than I thought it would be earlier in the year. Alright, let's take a look at our positions. Here is a look at our M3 position for December. It's been handling the downside move fairly well. Like I said, we had that aggressive down move. However, the position is still up approximately $2,000, which is about halfway to our profit target. The trade's doing fine. I did let it get a little bit out of whack to the upside, and unfortunately the market is going to take advantage of that. Looks like we're probably going to get a gap up in the morning. Not too concerned about this. If we really start cranking up to the upside, we'll start throwing verticals in here and eventually start rolling these back up again. But we're expecting a bit of a bounce, which shouldn't be a problem for the position, and then for it to come back into here, which should be really good for the month. Should we really rip up a lot higher, then obviously we're going to start hedging off this risk. But the position looks really well at this point. During the week, I did not do anything on Friday, by the way. This is what we looked like towards the end of last week, and as the market was coming down, I just gradually rolled these back. I'd come in here and I'd buy like a 770 butterfly, then sell off a 790, and buy another 770 and sell off a 790 a couple hours later. Market still continued down. I would just do another one. Started getting a little bit more aggressive here because the market started pulling down a little harder, and then more aggressive. We did 3 of them at a time here. The market continued to come down. We started buying, pulling down the 790s until we were just left with a couple of 790s here, and the market continued to come down. So we started pushing the 750s to protect our downside. Finally dumped out of all our 790s. Market continued to come down, and this is where we started to get really aggressive to the downside on Thursday. In the morning it looked like it was getting kind of nasty, so I just came in here and I started out buying 3 of the 750s, then I bought another 3 of the 750s, then we dumped 6 of these 770s. I ended up having a gamma trend problem to the upside, so to deal with that I rolled back one of the, or we only had one 760 rut call. It was getting to, I don't know, 50 delta or something. I rolled that back. Probably should have taken out these IWMs also and rolled them back to 72, but I just didn't do it. I was lazy, and I didn't go ahead and do that. So I'm going to pay for that one a little bit with this bounce if it goes anywhere. And finally, if you noticed, last week we were at 11 contracts. We were up some extra contracts. What I finally did is I dumped out this this last 770 here, and this is where we stand today. It is, like I said, it's traced up a couple grand. It's in good shape, and everything's looking fine. So I'm very happy with the way things are going. Obviously, where the market bounced, it looks like we over adjusted to the downside a bit. Hey, that happens. That happens. Look. All our risk is on the downside of this thing, and the last thing we want to do is let the market decide it wants to really come into crash mode and pull a 30-point day on us and have us get blown out of this thing. And as we sit right now, we get a 30-point day. We're not up money anymore, but we're still looking fine. We're nowhere near max loss and out. It's something that we can control. So safety does cost. And when you start rolling back for safety, it does cost you some profits. But like I said, all is good here, and I'm very happy with the way things are going. If the market does start to really take off to the upside, we will start shaving this upside risk off and taking on a little bit more downside risk as it becomes appropriate. Let's take a look at our bearish butterfly. Last week, this position was sitting up here at 820. If you remember, we started this position at 800. We had an add point of 840. We never hit that add point, but we did hit a delta theta ratio problem, which usually indicates that the market is skewed to the upside, or the volatility is very low, or we're very close to expiration. In this particular case, the market was skewed to the upside, and the volatility was particularly low. So we took that 800 and we rolled it up to an 820 butterfly. I said when I did it, I really didn't want to do it, but it is part of the guidelines, so I went ahead and did it anyway. And I also said the more important factor in that delta theta ratio when you have 1/3 of a position on isn't so much that you roll from 800 to 820, but that if the market does get to the point we have to add, and we had to add that 840, that we are at 820 and 840, not at 800 and 820. But that never happened because we never got to 840. What did happen is we did make this delta theta roll, and then the market backed off really hard. And according to our guidelines, under these conditions, when the market was at 780, we would take the butterfly and roll it back to at the money and reset our reference point. That's exactly what happened. The market came down to this 780 level. We pulled off the 820 butterfly, reset it at 780, and here's where we sit right now. We're up about $1,300. And everything is really looking good. We shall see where the market goes. We have an adjustment point to the downside here at 740. Possibly sooner if we have a delta theta ratio problem and we come down. It's more likely we'll be adjusting at probably about 748, right around here, and rolling this back to 750. We now have add points at 820 and 840 should the market take off to the upside. So all trades are looking good. We still have approximately 31 days to expiration. We'll see how it goes from here, but so far so good. That's all I have for now. I'll keep you updated with any changes, and have a great Thanksgiving, everybody. We have a lot of things to be thankful for, and have a great night. Good night.